And we're live back. Today we are joined by Diana Lin, a specialist in real estate, multifamily investor, developer, architect, and Diana also got quite a few business awards in her leadership in real estate. Hello, Diana. How are you today?
Hi, Victor. Thank you for having me. I'm good.
That's fantastic. Well, thank you for coming to the show, to this interview. There are a couple of reasons why we are doing these interviews with real estate specialists from Texas, from Florida, from Nevada, Las Vegas. The first one would be internet is full of influencers who are pushing this idea, this concept, that concept. And what we've noticed is that the prices are falling quite tremendously in Florida, in Texas, in other states. And at the same time, our viewers in California mainly, I believe, as also a real estate investor, that California is not the best place to invest. So we are reaching out to actual practical professionals, not influencers, to see what is their point of view on the market that they are in. You are in Texas, is that correct?
Correct. Yes.
Why did you decide to go into real estate, first of all, and why did you choose Texas?
Yes. So, first question, why I got into real estate. So, before I got into real estate full time, I was a practicing architect for about 10 years. So, I've done designs for high rises and mixed use developments, and all the way down to like small scale single family for 120 single family units in a master plan, right? So I've worked on multiple scales of projects, and one of the things I've noticed is that developers, they tend to kind of demand a lot from architects and don't quite appreciate the design process. But I was always sort of interested in real estate in general, so that's one of the things I'm interested in is the ground up development, especially as an architect. That's what I've been doing anyways. So I shifted to learn a little bit more about real estate investing, and first got into the passive investing route for real estate to kind of learn the ropes a little bit. And then after kind of getting exposed to the process and getting that first few passive deals sold and done well for themselves. So I stepped into becoming more active into real estate, and now I've been investing and sponsoring deals for larger commercial projects, multifamily projects, and working on my first ground up development project, about 150 units. So,
Wow, that's
mhm,
impressive. That's
thank you.
really impressive. Well, no wonder you've got those awards and recognitions. If you could share with us a little bit your about your first project, right? It was your um, breakthrough into this business.
Hmm.
Um, what did you use to learn about it? Which sources, and what was the project about in a few words?
Yeah. So when you were asking about first project, you meant first investment project, right?
Right.
And it kind of depends on what kind of project you're talking about. Is like my first passive investment or my first active investment?
Let's do both. Let's do both.
Okay, yeah, yeah. So, great question. My first real estate investing was actually buying a lot in 2016 in East Dallas, and my intention was to build a duplex, right? That was going to be my first real estate investing project as well as development, all in one, right? While I'm still working as a full-time architect. So I thought, oh, I'm an architect. I can figure this out. What I didn't realize is that I don't know everything. So um, there's so much more to development than it is just to design a project, right? So I learned a lot from that first project and ended up not developing it, sold it to another developer, and decided to take a less riskier route than developing a project ground up, and decided to passively invest into commercial projects. So we've invested our first project about $30,000 into an Abilene deal, 110 units. And as a passive, you don't do anything. You get to hold your full-time job and watch the active investor, the active sponsor, do everything for you. And so that was my first route into actual real estate investing, and that has done well for me. And so after a couple of years being part of this deal as a passive investor and still holding down my full-time job as an architect, I learned about how this process worked as an investor. Then when some of the passive deals sold and it did well as well, we decided that as in me and my husband, decided to shift into becoming an active investor. So that's in 2021 when a couple of our passive deals did well. And that's when I stepped into becoming an active investor. And our first deal was a 22 unit deal in Glendale, Arizona. And so to give you a little background on that, at least what I've learned throughout the process in the industry is that I typically invest with people that I believe are competent and understands the process and the intricacies of operating a deal. Then I would also partner with them, partner with those that are more experienced than you. So you would be able to also learn as a partner, but also take what you learn from the process and apply it to your own projects. So as a passive investor, I was technically partnering with an active investor, learning about the process after getting some confidence of my knowledge and skill set, then stepped into an active investor. And as an active investor, I didn't just jump into investing by myself or buying these deals by myself. I partnered with someone that has done it for about 2 to 3 years before me, and in a way that helps mitigate my risk and exposure of being a newbie into the industry, right? So as an investor, and even as an advice for anybody who wants to invest and become an active investor themselves, is to partner with someone that knows more than you, technically.
Right. Right. Well, it's usually the best way to go in any business. Why did you choose Arizona? You're based off Texas. Texas seemed to be a really good market, really good place for the development for real estate. Why your choice was Glendale, Arizona?
Yeah, so that's a great question. I was going to basically, leading into this partnership angle is that my first deal or my first partner happened to have a lot of a portfolio, a lot of investments in Arizona, right? So I didn't want to partner with just anyone or just anybody that can walk and invest. I had to partner with someone I trusted. And then they just happened to have a portfolio of deals in Arizona. So that is the reason why my first deal was Arizona, because I partnered with someone that I trusted and wanted to learn from, and found the first deal together for a 22 unit. If we happen to find a partner that does have an expansive portfolio in DFW, then I would have done that. But then I didn't find someone that aligned, right? So that's the reason why our first deal was in Arizona, and we eventually got into the DFW market. So we do have a project right now, a deal in the DFW market.
Right. How is, in your experience, in your point of view, how is the market in Texas doing right now in general versus other states?
So I would say that, depending on what submarket you're talking about, but in general, Texas is doing a little better than the other markets, but still, like in DFW, there is a supply of housing flowing into the market, where it's hurting some of the deals like mine, which is more of a B class property, right? Because there's a lot of new construction coming on. Class A properties are flowing into the market with their inventory, which is basically what we have to do for Class B properties, is offer more concessions and lowering the rent to attract more tenants to apply to live in our property. So what we're seeing is that we're competing with Class A properties that's offering same rent as Class B properties. We have to get creative and trying to find ways to attract them into our properties. But number two, because the interest rate hike that we saw past year, there is a strain for those that want to find housing. So those that want to find housing can't afford the mortgage, so they need to go live in an apartment. So the thing is that the rent that they were used to paying is getting also too high. So then you're experiencing what we're experiencing is or seeing are higher delinquencies, right? And so with higher delinquencies, they have to move out. So we get more turnovers. And with turnovers, then we have vacancies. And with vacancies, we have to find ways to get people to move into our property and offer specials and concessions. So it's kind of challenging right now, but we're hopeful to that, by next year it would be in a better spot.
Right. Well, thank you for sharing. And you've worked on Arizona's market. You obviously work in Texas. Which other states' markets did you work on, and how would you compare them briefly?
Yes. So, for Arizona, what we were always interested in investing in that market because of the upward growth that we were witnessing. So once we got in, we were riding onto that growth, but once the current recession kicked in, then we saw a little halt into it, right? And so that one I feel like is hurting more because it has such a expansive, explosive growth happening, but because it went up really quick, then it's gonna halt a lot quicker and it's gonna hurt a little bit more. So we're seeing some Arizona properties hurting a lot more than we see in other deals. The Dallas deal is, we still have a lot of people moving into Dallas, so it's not as affected as other markets. And the ground up development that we're working on is actually in a New Mexico market. It's a new market that I actually haven't invested before, but getting into and learning about how once we did some research on the market, how there is a lot of demand for housing. So we just look at the economics, the demands, and the need for these type of housing. And if all the numbers support that this type of housing can happen and can support a new build, then that's when we go in to build.
Which resources do you use to conduct these analysis?
So we do multiple sources. We reach out to brokers to give us a market report, and we also even talk to property managers who are managing these type of properties and giving us an idea of what market rent they believe they can achieve in this certain market. But we also tap into national databases like CoStar. But a lot of time CoStar, their data is a bit outdated, that it's not as current as versus like the traditional way of just calling these properties directly to ask about what they're renting out for. So we tap into 3 to 4 different resources to get a full picture of what we believe that we can achieve in that market.
After New Mexico, which you just shared with us, which other states do you believe are interesting for your future developments?
Yeah, so one thing that I've kind of come to realization is that DFW is super competitive. It's one of those primary markets that people love to invest in for good reasons too. But one of the things is that it's super competitive and it's hard to get a deal to pencil when people are bidding up the prices and it doesn't make sense anymore. So one of the things that I'm looking at is looking at outside of DFW or even outside of Texas, exploring markets like Arkansas next door of our state, and seeing that the price bases are much lower and yet the margins of profit are much higher. So people don't look at the secondary and tertiary markets because it's not a sexy city to look at. But if you look at the market and if you look at the numbers, then it checks out, because all you need is to see how other properties are selling and what they're achieving and look at the price basis, and you underwrite the same exactly, but in terms of the margins, it's much higher and outside of these primary markets. So that's something that we're looking into.
In terms of your own projects, your own investment or your developments, what is your, I would say, top interest? Multifamily, maybe you're also interested in developing single family projects.
Yeah, so I'm primarily interested in development. The thing about development is that it's a higher risk asset type. So I diversify and doing a little bit of both, which is existing assets and renovating them and holding it or selling it. And if I could do development, I'll do development if all the numbers check out. So ideally, it's all development, but the thing about development is that you pour your resources and capital into one project. It's tied up into one project for about a year, right? As opposed to, say, for example, doing a single family renovation. If you want to do a flip, it will just be tied up into an asset for about 2 or 3 months, and then you get your return, right?
Right.
So I would say, moving forward, it's going to be a combination of both. I would still do value add, just to be able to get some sort of stream of income, but do developments as more of a longer outlook of strategy to build a portfolio.
You mentioned that you began with being a passive investor, then you transitioned into an active investor. What was your recipe, let's call it that way, of finding other partners, working with private equity, if you
Mm-hmm.
if you do?
Yeah, so the recipe, the strategy, and that's something that I've come to learn over the years, is that real estate business is so heavily people-based industry, right? Um, you have to know you have to know the person before you invest with that person. Um, and if you don't, then you're going to put yourself in a bad position, because even though this person, like you were saying earlier in this interview, you see a lot of influencers flouting success online and also a certain personality. When you actually invest with them by just getting confirmation of their personalities online, it doesn't quite translate to actual operational excellence, right? Whatever they flout online doesn't necessarily mean that they do a good job operating deals, right? So learning how to differentiate and weed out those type of people and getting referrals and affirmations from existing investors of that same personalities or sponsors, then you're going to be, that's part of the due diligence that you're going to need to do whenever you do invest with someone or partner with someone. So that's something that I came to, and I am still learning that now, but again, a lot better of discerning these type of individuals. um, I've come to be a lot pickier nowadays with my partners. Instead of taking the face value of what they told me, I need to actually dig in into getting a little bit more affirmation about their experience and execution on these projects.
What are the traits that you're looking at? What are the red flags based on your experience?
Oh yeah. Where do I start? Let's get the red flag that I see is if they have too many projects going on at the same time. And if it's okay to have all these projects going on, but do you have the systems and process in place and people under you to support all these projects? If you have all these projects and you don't have assistants and partners to support you, then that's a big red flag, right? Um, Another red flag is is if you ask a certain questions to verify certain things and they don't provide it, that's a red flag. So if a partner comes to me and say, a potential partner comes up to me and said, hey, do you want to raise for me? And I ask them, so how many deals have you sponsored? They would tell me a certain number, but it's going to be up to me to make sure that they truly are operating that deal. Because sometimes, some sponsors would say, oh yeah, I'm a manager or I'm a GP on this deal, but I later come to find out they are a general partner, but they don't call the shots, or nor do they do the day-to-day operation, right? But now you know, how do I expect them to be able to execute the same on this potential new project that we're going to partner on, right? So that's number two. I can give you a list, but those are the primary twos.
Well, for example, if in a theoretical situation, I would come to you and say, Diane, I'd like to invest with you. You ask me, how many projects have you done in this particular way? I'm like, 0. I just have the money. I'd like to invest. So basically, I'm the red flag.
Well, as a passive investor, then as a sponsor, and then you're coming to me as a potential passive investor, I still need to qualify you, right? Are you truly accredited, right? I'm going to give you paperwork to verify if you're accredited. And if you're not and you're sophisticated, then I want to make sure that you're aware of the risks that you're going to go into with this deal. If it should be a red flag to you as a passive investor if a sponsor just takes your money without asking questions, right?
That's very interesting perspective. I've never thought of that.
Yeah, I mean, you would think that they just take money and don't ask any questions, but you would need to ask a question about whether this sponsor is just taking your money and running away with it. It's possible, right? It happens. You hear stories all the time, but that could be something you should look out for as a passive investor. You come into a sponsor, it's like, hey, here's $50,000, and then that's like, okay, no question asked, I'll take your money. It's like that's why having a relationship is super important, because when I'm a passive investor, because I've been as a passive investor first, right? As a passive investor, I want to make sure that we invest in about 8 deals as a passive investors, and one thing that we noticed is that the sponsor that ended up doing the best are those that we have the best relationship with, or we notice that they have the work ethic and the moral compass that aligns with us, so we know they're going to do what they can to make sure that our investments are coming back whole, right? So when you invest with a sponsor, you want to make sure they align in value with you, and also if they have the work ethic that they will make sure to do whatever they can and pull whatever levers they can to make sure this deal does well, right? But also you want to make sure that they're honorable and honest. It sounds very simple and silly, but it's true. It's like you want to make sure that that you're investing with the right partner as a sponsor, right?
In our communities in Silicon Valley, in Hollywood, people are raising more and more interest in diversifying their portfolios or building their portfolios. Now, you mentioned that you need to have these relationships. So what would you advise a person who is about to begin, where to start building these relationships, where to meet these people?
Yeah. I would recommend just attending all these real estate meetups, these local meetups that offer educational seminars about how to invest. A lot of folks that do attend these meetups are investors themselves, so you'll run into folks that are beginners to all the way to experienced. So, and that can usually give you a leeway on which deals to invest. You got to start somewhere to start building a relationship, and you got to show up at these meetings. You can also go to these conferences, those national conferences or local state conferences. Those are great places to gather because folks from all around the US would attend these type of conferences, and you get to shake their hands and meet them for coffee afterwards, learn about their investment strategies, and if you like what you hear, then you invest with them. And then if you're ready to just go straight into sponsoring deals yourself, then finding a coach or a mentor to help you with the process or the best way to get into it. But you need to find the right coach. It's the same thing for investing with a sponsor. If you want to find a coach or a mentor, you got to vet them too, because a lot of times, same thing as you were saying before, you see these influencers online selling these coaching programs, doesn't necessarily mean they're qualified to teach.
Right.
So yeah.
Are you considering becoming someone's coach, mentor?
Yes, I am actually. And it's a case-by-case basis, but I don't have a formal program, but I've gotten a lot of folks that approach me to get coaching for myself. And something that I've been exploring, but I'm not going to formalize or at least pitch a program in the next year or so until I get an understanding of what people want, and then I might do that once my current business isn't so crazy.
It's good that you mentioned, because when I meet people, whether it's a conference that we are sponsoring as a media, or in interviews, different meetups, a lot of them who are still working on W-2, right, as an employee, they are all dreaming of running their own business. And when I'm telling that, hey, you have 5 to 9 or 9 to 5, right? When its business is 24/7. You just mentioned that your business right now is quite crazy, hopefully in a good way. Were you busier when you were working as an architect full time, or right now?
Oh, I think I am busier now than I was as an architect, but I think it's also because I have 2 kids now.
Nice,
So
congratulations.
thank you. So it's a lot to juggle. But if there is any sliver of time, just kind of focus on that to learn or to network, right? If you have a good partner or a spouse to support on watching the kids at home, then use that time to network or look for deals, right? So I think as an architect, I was busy as well, but it's not as fulfilling as running your own business because now you have independence, right? You can determine whether you should work or not. So it's the same thing as running your own business. If you don't work, then your business doesn't operate. But then if you work, then your business operates. But the thing about real estate is that you invest into these deals and they cash flow, right? If you set it up where they cash flow passively, then you don't necessarily need to work actively for 40 hours a week like I was as an architect, right? These these real estate deals are mailbox money, right? They're working passively while you're continuing to look at more deals to add more mailbox money, right?
Right,
And
right.
that's a full reason. That's a main reason why we're in real estate is to generate these passive income and continue to grow it so we can actually have more time for our family.
Right. Well, that makes perfect sense. How did your business feel, and maybe businesses around you, market around you, feel in a connection with elections, which we have just survived?
Yeah, a lot of the investors, and also it's not just investors, but banks, right? Um, the lending environment is kind of crazy because they change every week or even every day. But a lot of investors are kind of like waiting until the election, so they don't really want to invest until they know who's going to be president, right? So um, now that the election finally is over, which I'm glad it's over, I think people are going to feel less uncertain. So they'll be willing to open their pocketbook and go into a market that they want to get into to begin with, right?
Right. Right. Well,
Yeah.
makes sense. And Diana, one last complex question. I've read about you online. You got the Connecting CREs award. You got the Biz Now award. What are these awards about? What did you get them for? Could you please share with us? I think it will be very interesting for our audience.
Yeah, I be happy to explain. It's essentially highlighting the achievements and leadership of women in real estate. So, and the thing is that there's not a lot of women in real estate, so I like to joke that there's not much of an option anyway, and I'm just happy to be one of them. But yeah, I mean, it's an honor to have these awards. So it's great to have it to kind of like feel validated, I guess, of all the hard work that I've done. But it's not just me, but the team and the mentors that kind of got me to where I am. So I've always wanted to give back and to also mentor and guide other women in real estate to get to the point where they need to be. So I have a local real estate meetup called Real Estate Ladies that I started about 2 years ago, and It's been quite a success. We got a pretty good, well-received attendance, and also feedback on the value it brings to our community. So we're continuing to grow it and to build it, but it helps me because it's a group that I was trying to be part of when I got started in real estate, and I was looking for that type of community because I needed guidance. I needed an idea how to get to independence or to get more into real estate investing. So it's nice to create a community for those that are looking for those type of community. So I'm
Oh
hoping
yes,
to
absolutely.
encourage more women to get into real estate.
Well, definitely, and I think that also media is one of the best ways to do that. I'm sure that a lot of people, a lot of our viewers, will get inspired by your story and be looking for more news from you. And please, keep us in mind to help your community grow and help spread the word with the others.
Yes.
We need high quality mentors and professionals. That's for sure.
Yes. Happy to help.
Thank you. Well, Dan,
Mm-hmm.
thank you so much for your time, for coming to this show today. We'll make sure to, again, spread the word and spread your knowledge, your wisdom, your experience with our viewers, our readers, and well, also we hope to bring more potential investors to you and potential clients.
Yes. Thank you for having me, Victor.